dear fellow Kenyans, I would like to take this opportunity to take you through the Finance Bill 2026-2027. I would like to cover the key proposed income tax amendment. So I just prepared a summary for information purposes, since I know the original document is much complex and use a lot of complexity, but is very simple sometimes to interpret if we put it in layman's language so that everybody can understand what is happening. So what I would like to touch first is one income tax amendment closure, which talks about income tax return deadline reduced. So the bill is proposing to reduce the filing deadline for tax return from 6 months to 4 months after the end of the year. So how can I put that scenario? So we know we usually file tax in the subsequent year, like the tax for 2025, we are filing them in 2026 when it comes to the income tax. So there, we take from January to 30th June, from 1st January to 30th June to finish our filing. But now KRA is suggesting we reduce those months to 4, and the deadline now becomes 30th April. Imagine if the workload, which is usually there before 30th, even people cause for some days to finish doing what they are doing, and now you are given up to 30th April to be done with your books and ensure you have declared to the KRA your gross income and technically adjusted all the expenses, which based on the new KRA regulation is that every expense which will be raising against your gross turnover, it must be validated via e-teams, and the information has not been clearly disseminated to the Kenyan taxpayer. You understand the workload which is there and which will be there when it comes to filing of return. Also, when it comes to filing of new returns, you notice that you are given a grace period of 1 month. So, like the year which ended in 2025, in 31st December 2025, by January, in case you receive zero income, you'll be required by the taxman to have filed nil return before January. And now people with the income, they are given that the allowance of how many months? 4 months. So this is a tax proposal when it comes to the income tax deadline reduction from 6 months to 4 months. So the impact of this is that technically it is giving taxpayer less preparation time to ensure their books are right, to ensure they have adjusted all the adjusting events. And also another impact which will be causing or effect, it will increase late filing. That is because KRA can attest, even if we are having even now 6 months, people are defaulting, or people get themselves catch up by the 30th June before they file their return. Also, a lot of penalties will increase. And what does penalties lead to? They lead to more cases in the tribunals, where government lose a lot of revenue, because immediately a taxpayer takes the revenue authority to the tribunal. That means they will not be paying their principal tax, because they have taken each other in a tribunal, which the tribunal may take a lot of time before it settles the dispute, where KRA loses a lot of revenue, paying lawyers, time, and so on and so forth. Also, more pressure will be on accountants and SMEs, because technically we can say there is unemployment in Kenya, but getting an experienced accountant is a problem. So it is giving pressure to accountants to ensure that their books are in order before April, 30th April, and the taxpayer can be able to remit what belongs to the Caesar when it comes to 30th April. So it is not that good. It can be easy if KRA have effective system, and the autopopulated system, they are more effective. But as per now, I don't think we are in that position, as in my own opinion. So when it comes to the residential rental income tax, which has been increased, which we usually call the monthly rental income tax, the MRI. So the MRI was introduced, but MRI has been a pinpoint for a lot of landlords, because this rate is not constant. This rate has been fluctuating from 5%, 7.5% to now 10%. So what does this mean? This is increasing burden to the landlords, because the rate has been increased by around 2.5. This is a lot of money, because this amount of MRI, which is a tax which is submitted to the revenue authority from the gross amount which was collected from a rental property, you submit the gross amount. And what does this means? This means that the gross turnover of a rental income may be for 70 units. Before deducting any expense, even if you paid you had a machine which fall off, or you experience some maintenance in your building, you don't reduce anything. You pay this. If this bill pass, you'll be paying the 10%, which is the gross turnover from that rental property, without deducting any expense which you incur into that property. And this applies to landlord who collect a rent which is in average of 24,000 per month, or 288,000 to 15 million annually. So this touches close to all landlords, because in most scenarios, a landlord can make a gross turnover of around 24,000 per month. And what does that mean? This is increasing burden to our landlords. And now this will have a ripple effect, because due to higher tax for landlord, there is a possible of a rent increase to tenant, and also a reduced return on a rental investment. And this is so risky, because a lot of people in the rental business, they have constructed their house using loans. So more default when it comes to the banking sectors, more auctioning of people's building. So this is more or less detrimental, and it will have a lot of impact to you as a tenant, because expects an increase of 500 from your landlord. That is the point. So there is also another point which is here, which I think is also important. During this amendment, there is a request to do an expansion of the capital gain tax. So when you are transferring asset, maybe it is land, car, there is when you make that profit, there is a capital gain which you make. But now this one is touching more on offshore shares and non-resident disposal of shares, deriving value from Kenyan asset, impact, major effect on. So the impact is, it has a major effect on investment deals, more scrutiny during mergers and acquisition, and increased compliance and complexity. So this is we have an expansion of the CGT, what we call the capital gain tax. So the bill is proposing to review this tax, more so punishing more on non-resident disposal. So also the government, before I forget, is proposing to tax retained earning or retained dividend for a company. Sometimes the company suggests, rather than paying out dividend, those dividend can be retained as retained earning and will be reinvested in the business to increase the investment portfolio in order to earn more profit when we have more speculation that maybe the business will perform well. But even if there will be those retained earnings and the dividend have been not being paid out, the government will be assuming a tax which they are saying is an excise duty, which is a sin tax, because excise duty is technically a sin tax. That is why it is usually applied in the tobacco material. But now it is planning to introduce a tax when it comes to retained earnings, or dividends which have not been paid out, at a rate of around 16%. It's just a proposal which is there, which I think it doesn't make sense. Why do you need to punish me and I have not been paid out? I have not received the dividend, and you want to tax the dividends which have been taken back to the cycle, to the running of the business as retained earning. So that is a question another. But there is but to make this point clear, point 3 is that the government is planning to increase CGT tax in transfer of shares and non-resident disposal of shares, deriving value from Kenyan asset, which the impact is on foreign investment deal, which technically will reduce. Also, there will be more scrutiny when you are doing your mergers and acquisition, which will increase compliance and complexity. And what does this mean? Corruption. This is technically corruption. When there is a lot of bureaucracy when it comes to this kind of transactions, this is corruption. You just make a KRA a disco hall for corruption. That is the point. Also, there is other tax which will be affecting you, or income tax amendment which will be affecting you, which is the new withholding tax on scrap metals. So this is technically informal sector which is being gotten off, which the government want to monetize clearly. I don't say it's a bad thing to monetize and collect tax, but it's the model which the government is choosing to get this tax from the scrap metal dealers, because there is a proposed 1.5 withholding tax on scrap metal sales. Scrap metal sale to impact the impact. So a proposal is to introduce a 1.5 withholding tax on scrap metal sales. So it is not from the gross profit which you make from your scrap metal business. It's from the gross transaction. You made a sale of a scrap metal sale, which is before deducting your expenses or any expense which you incur in these scrap metals. Maybe collection is also an expense which you incur. You incur a lot of petrol when maybe going from one village to another, in case you sell some agents, and you incur some cost. Technically, in any business, you incur some cost. I cannot be so conversant with the costs which correlate to the scrap metal business, but the costs are there, the storage costs, also all the costs which relate to security, because these metals, you cannot just keep them anyhow. But what does this mean? This means that there will be cash flow pressures on the traders, and also there will be more compliance obligations, because I don't think a lot of tax scrap metals dealers have more information about this, and they will be needing some accountant expertise to help them to make them compliant. And also, there's a possible growth of informal trading. People will not be registering their scrap metal business. I'll go and open my scrap metal business in my rural area, and will not register it because the compliance matters. And when I comply with KRA, I'll be getting to a lot of troubles, and they're encouraging informal trading. So the more KRA is trying to make doing business complex, and also there is this proposal is not bad of 1.5 withholding tax, but I need to get clarity, or I need to get more clarity if this 1.5 is a final tax, because if it's not a final tax, that means you'll be paying other tax after paying this 1.5 withholding tax. So, and technically, we also need to ensure it is capped, because how we have seen in the monthly rental income, there has been a lot of adjustments. It is keep on fluctuating. Even planning yourself as a business and your operation is technically getting out of hand, because you cannot be able to plan yourself with this fluctuation or these changes, tax changes, which keep on changing, because this 1.5 is not capped. There can also be another amendment, and then it can become 5% withholding tax on the gross sale of the metal sales. So we need to have clarity about these. So also, which now will be touching us as Gen Zs or youth, is the expansion of digital and software taxation. So the definition of lawyer and management and professionals fee has been expanded now to include software payment, digital platform, payment system, and card transaction fee. So technically, previously, there was a withholding tax that was there for management and professional fees above 24,000, which was 5%. So the definition of digital and software taxation has been included there to broaden the definition. So what does that mean? So now that means that the software payment and digital platforms such as YouTube, TikToks, you can mention them to perpetuity, they will be subject to tax. You will not be running away from the revenue authority. So the impact of this is that more business will be subject to withholding tax. There will be higher cost for tech and fintech firm, and also increased taxation on digital economy services. And we are discouraging now people to go to the informal method of payment. We had progressed well. I think I was referring to another guy who had spent allowed 6 months without touching cash. But now where we are heading to, we'll be turning to cash, because expect transaction to increase, even the M-Pesa transaction to increase. Because when these taxes are put here, expect just have expectation of that. But now we'll be having a problem with no taxing of the digital platforms such as YouTube, because as you know, YouTube has a withholding tax of 30% from the US government. So I don't know if the government of Kenya will get into agreement with the US government to sign a double taxation agreement, so that I am shielded from paying withholding tax twice because I'm charged 30% in US and for the income which originated from US viewers. And also I'll be subjected to the another 5% in Kenya. So I need clarity about that and the brain which are explaining this concept, because we need clarity about that and use of less ambiguous language when it comes to this. Then what I want to touch again, and what also clicked my mind, is the tax on gambling and winning. I know people hate betting, but technically it has also employed a lot of people in Kenya, this betting industry, and some people bet and some people have it, and they do it, and it is technically acceptable when it is done in a controllable manner. But the bill is proposing a 20% tax on winning. So in case you win like 20 million, 20% of that 20 million which you have won from a betting firm, or this normal winning, it will be subjected to 20% tax. The impact is higher deduction from winning. Some betting company will have to close because maybe it will regulate the betting culture which has been prevalent in Kenya, but also this betting company will not be able to operate in this environment, and they employ people. So it's not a bad business because it is creating employment for Kenyans. And also there will be potential migration to offshore platforms. So we are creating our own platforms because even some Kenyans, they run some betting farms. So we need to shield them, and technically the bill stop looking like it is like a punishment to the betting industry. So we need to view it in both sides. I agree the detrimental side of the betting industry, but I also consider the impact it has to our economy when it comes to employment opportunities. It creates a lot of opportunities for Kenyans who in the data sector and also in the software sector. So is a balance which we need to strike all together and have clarity about it. Also, something I want to touch on is also tax on repatriate income. So sometimes we have repatriate directors who are foreign directors who come to manage companies in Kenya, and they are gotten. There is a new 15% tax on repatriate income for a certain non-resident company in extractive industry. So the impact of this, in case you are charging 15% to repatriate income for certain non-resident company in extractive industry, so this is technically increasing the cost of multilateral firms and also reducing effectiveness to some foreign investors, because foreign investors, in case you are taxing them, you are discouraging them from your country, and technically we need them because I don't think we have the brain capacity and also the resources to develop in some sectors. Some foreign expertise, they are required to come and help us. So I think it's a very huge balance to strike when it comes to such matters, because it will not be a sweetener when it comes to foreign investors and also to multinational companies which are operating in Kenya. You will happen to see some closure in case the bill is passed. We need money, but we can be searching money and losing money at the same time. So we have something to smile, but not a big smile, just a minute smile, because the bill also proposed an amnesty on penalties and fine and also interest if you pay your principal tax. So first, to claim for amnesty on penalties and fine and also interest, you need to pay your principal tax or go and agree with the taxman for tax condonation in case that principal tax is not agreed on. But in case you pay your principal tax, which is the starting tax, you benefit from amnesty program, which it comes once in a lifetime, and you pay your penalties. Your penalties are forgiven by the Caesar, and now you can pay your principal tax and you get clean in KRA. Then the benefit of this opportunity for taxpayers to regularize all their historical KRA liabilities, or to bring in order or clean the system and start as a new man, as a saved person in KRA. So also there is something which is so important here, which will touch a lot of Kenyans, because I know a lot of Kenyans more so they are informal sector, and more of them they are in Motuba business. So importers of second hand coal may pay an income tax based on 50% deemed profit of custom value. So KRA will be taxing these 5% on deemed profit of the custom value, of the gross value of this Motuba crude. You'll be paying a 5% withholding, or you'll be paying a 5% tax, which is a final tax. That is the best thing with it. It's a final tax. But KRA will be deeming you have made a profit. What about, because it is being taxed at a custom value, unaleta mtuba yako, but when you get into the market, you ensure that maybe this cloth has been damaged in a certain extent, and the value which was suggested, this 5%, you have paid it, and it is a final tax, and it is already paid based on the value. Maybe you have brought them as grade 1 like camera, and then when you get to the market, whoa, I was cooked. Or maybe your bag get banned, and all your clothes were abandoned, you have not insured them. And also, because they look some extreme event which cannot happen, but in some scenario, I think in the business, I think like those happen. And how will they be coming with this valuation of this Motuba cloth, or arriving into this value and valuing this amount of clothes? I know you can value them because with the cost which the importer has bought them with, but I'm trying to ask myself a query. To come up with this value, it will be somehow hectic, though they are saying it will be from the custom value of good is before good are realized, but it's technically complex to navigate through this. It seems it sounds good from far, and it's also far from good at the same time, because how are you sure as a Motuba importer, but this 5% will not be adjusted the same way they are doing for the monthly rental income? What about next year? The bill proposed to 15%. How are you shielded? So we need also, in case we agree with this 5%, Motuba people, they need to agree that this amount is capped. Please ensure there is clarity about this, because these are sustaining the market. You are waking up 1 year, you have this tax, then you stay again, this tax is being reviewed again. So even for planning purposes, it's becoming 15%. Then tell us if this amount is 7.5, let us remain 7.5 for just a period of time. Or in case you are adjusting it, just adjust it downward for effective planning. This is just my suggestion. But the impact of this is more surveillance by the taxman, expects some increased audit, and also greater integration between financial and tax system. So ensure your data, the KRA is trying to monetize every data which you have. So expect integration and more integration between your financial system and the tax system to ensure you are clean and do not be getting into problem with the revenue authority. So the most important takeaway in this finance bill, basically, it is focusing on widening tax base, which is a good thing, but expanding widening tax base for what? And for what services? That is our question. Then they want to increase compliance and also taxing digital transaction. The government has gone hard on this digital transaction. I don't know who hurt them, how the digital transaction hurt them. And also they wanted to tighten KRA enforcement. So tightening KRA enforcement for what? Is it an enforcement authority or a service? Is it a police enforcement service, or is it enforcing or a service of collecting tax? Because there is something where KRA is trying to treat treating Kenyans as criminals. Why I say that is basically, even reducing the explanation which was given by the CS regarding reducing the filing period, is because the KRA is saying like Kenyans, they are doing some monkey business between those 6 months to report or to understand the profit which they made, which doesn't make sense to me. All of us, we are suspecting each other, because I think as a reflection, we have citizens who have bad faith about the government, and the government which is having bad faith about their citizen. That's why KRA is an enforcement body. When a Kenyan see KRA in their shop or in their business, they start trembling, because this is not a service, it's an exploitative service. Because in KRA, we were given a scenario, there is always a good man, a bad man, and an angry man who come in your business. One guy is telling you, we will deal with your thing and we will solve your thing. The good person tell you, we can solve the things using Jia Panya. and the bad guy is telling you, you know you are not compliant, we can take you to the tribunal. But that is a question of another day. So, key concern, including, there is a shorter filing timeline, which is there. Also, expense more withholding tax. Also, there is digital taxation, which is there, and there is rising compliance costs, because Kenyans, it will not be easy to be filing returns as it was. That I must assure you, it will not be easy, it will not be a walk in the park, because if this is what it has been this year by just validation of expenses, I don't think it will be a good dance this year. We will sweat next year, 2027, we will sweat when it comes to filing of tax. In case some of these amendments, they are passed. And also, I would like to touch something a little bit which seems to be out of context with the document which I'm reading here, which is technically KRA, where KRA is speaking of something regarding agency notice. Something which companies need to have clarity about agency notice. So regarding agency notice, in previously when you are disputing the principal tax which was given to you by KRA, when you take the KRA to tribunal, in most cases, first you are not paying this tax before you go to the tribunal. But now, before you take KRA to the tribunal, you are forced to first pay us this 1 million before taking us to the tribunal. So if the tribunal agree otherwise, now KRA is assuming it will refer that money. So you are supposed first to pay us, then take us to the tribunal after paying that amount, so that now we can agree and start now auditing the system. So how can we audit this system? Because in most cases, in the comparing the companies which Kenyan, more so in the small and medium enterprises business which they have, they cannot compete with KRA. So in most cases, you'll be defeated in the case, and you'll be required to pay that principal tax which you dispute. Be added there today. In case you have any query, you can reach me using the contact in the description, and also you can call me and we can have discussion regarding the finance bill, taxes, withholding tax, and any query which you have when it comes to taxes. So thank you for watching, and have a great evening and a nice day ahead. Thank you, and God bless you.